Hey, Paul Morrow here, and this is Trump Tariff Trauma, Chapter 2. All right, thanks for joining us. If you haven't subscribed already, hit that little button there and subscribe. Stay to the end of this, and we're going to downstream some information to you, including something that's valuable for you to cash in on. It's actually worth money. Just stick around for that. But I will tell you, we had other things scheduled for today, but as many of you who watch the market, we did a video on the expected and projected issues regarding the Trump tariff turmoil back in January. We had some expectations, projections, some guessing or whatever, but you never know exactly how these things are going to work out. But we take all the information that we can from our economic sources and we put it into a blender and create sort of a cocktail that's digestible by our clients and listeners. As many of you, I ran a financial practice at the Greater Boston area for 50 years, and I think that I've seen a lot of financial information on people, and we've taken a lot of that education and turned it into helpful things for our clients. So what I said before, which I'm going to stick to now, especially as of today, if you happen to be looking at the U.S. stock market, I'll give you some numbers, but what I said before is still true. Number one, if you're a young person and there's market turmoil, you should not only ignore it, you should embrace it. There is really no 20-year period where the U.S. stock market has failed investors. There's no 20-year period with one president or one administration. There is no 20-year period of essentially bad investing, even if you just invest in the index. So take my advice on this. If you're a millennial, by the way, you'll read about this in my upcoming third book called 5 Steps to Smart Financial Wealth Building. It's a follow-up to the first two, which I did. Some of you have already gotten a copy of Smart Financial Grandparenting and Smart Financial Longevity. But if you're a millennial, this book's coming out in June. It's all about you. It's about wealth building, wealth building, wealth building. Buy into it, okay? What I said before is still true. When the market goes down like this, which by the way, as of right now, it's down 8%. We're in a full-blown, with this tariff thing, expected correction, recession territory. I would fully expect that this tariff situation is going to live up to what most financial professionals think, which will be a 20% pullback in the market. Buy more stock in U.S. companies if you are a young person, because if it's Walmart, if it's McDonald's, if it's Nike, if it's the companies that you like, that you believe in, and if it's extra money that you've got, right? This could be the greatest buying opportunity in the world, because if you've got a stock that's $1,000 and it goes down to $800, you can buy more. So I would say if you're a millennial, buy more. If you are an ex-genner between 45 and 65, you're an allocator, you should be extremely allocated to a balanced portfolio, which is 50% fixed income. Now, if you're not, we're going to talk about that in a little bit. And of course, if you are a boomer, 70 plus, you should have been reallocated to a longevity portfolio some time ago, where a significant portion of your money is not subject to the stock market. Okay? So let's revisit those three people and talk about what's actually going on today. People are going to call this Trump's trauma of tariffs, Chapter 2. It wasn't just a threat. It was actually what he actually decided to do. Now, whether that turns out to be right or wrong, this is not political. This is financial. As of today, the market was already down 4% from his talking about it. And now enacting them, the market's dropped 4% today. So it's down like 8% down. What does that mean to you as an average investor? And let's talk about the average 401k in America. I'm not talking about the super rich. They don't care about this stuff. In fact, they're probably all going to be pouncing on a lot of equities that are down temporarily, because anytime there's a market correction or a recession like this, it usually takes about 300 days for it to fix. So you're talking about a year, right? And to a long-term investor, a year is nothing. However, to a 70-year-old on income, long-term investing is like a month, okay? It's not waiting years and years. You got to get your check next month. So for the people that are long-term investors, the market has lost $2 trillion today. That's a T, 2 trillion. And the projections are for lower growth going forward with these tariffs that were enacted. You can look them up. I don't really need to give you all the details on it. It's really easy to find. There's a couple of great publications if you want a copy of it. There's one by Ray Dalio, and I think Ray Dalio deserves a lot of credit for things that he writes. I actually think his book Principles is great. He has a publication called The Effects of Tariffs, How the Machine Works. I'll be happy to send you the link to that. It's a great one. Capital Investing Group, which is the American Funds, also has another great publication. We follow American Funds for years. It's called Guide to Tariffs. I'll happy to give that to you. I don't need to read these things to you. You're all grown-ups. I will tell you what the effects of them are, okay? It's not just raining, it's actually pouring, because this is going to create lower growth. It's definitely going to create inflation. Now, who is it going to hurt the most? Of course, it's going to hurt the lowest income people in the population the most, because they're the ones that consume the most. People that are really affluent don't have to buy a lot of stuff. They own all the stuff they like, and they don't really have to look at the prices when they go to Whole Foods or something, and probably some don't even go to Whole Foods, right? And the fact is that the lowest income people are the ones that have that average 401k of about $400,000. That's the average. There's a lot more money and a lot less, but let's say your 401k that you've worked hard in, and you've invested primarily in the SPY or the SPX, which are indexes that everybody suggests you invest in because they're low cost. It's the S&P 500. So that's down 8%. That means you paid $32,000. So let's just say your average 401k, which was 400, is now 360. Okay, that's what happened. I'm not suggesting you pull out. I'm not suggesting that if you're a young person, you stop saving. In fact, the opposite. If you can afford to put more in, do it. If you're not at the max over the next year and a half, 2 years, I would max up, all right? If you're a midlifer, out of that 8% reduction, you should only be down half of that, because half your money shouldn't be in the market. So again, if you have 400,000 and you're a ex-genner, 50-something years old, only 200,000 of that's in the market. So really, when you look at an 8% reduction on half your money, down 16,000, right? Overall, it's half. That's what a balanced portfolio is supposed to do, okay? This is an interesting opportunity time too. If you have lost money in the market, we did a YouTube video about portfolio restoration a while ago. I'm going to do it again today because, frankly, we've already gotten phone calls. Our firm's getting phone calls. People are nervous. People are concerned. I get it. I get it. Everybody loves to make money, and you don't like to give it back. And I want to remind everybody that the last 4 years of the prior administration was very good. You can knock the prior administration for a lot of other things, but this market went up 80%. Over that 5-year period, that $400,000 portfolio of 401k was $208,000. It grew 80% and got to $400,000. So now we're giving back some of that. I don't know how much we're going to get back. That's above my pay grade, but I will just tell you that if you're feeling the pinch, now is the time. If you haven't reallocated, I will give you the best news of the day, which is how you can reallocate today and make $200,000. That means you can make $200,000 today reallocating, if you haven't done it yet, right, to your fixed income portfolio. So let me just tell you what I mean. This is, as I said, April 2025. And by the way, everything we talk about is today. It might change tomorrow. Tax rules might change tomorrow. The market might change tomorrow. These reallocation products might change tomorrow. But I want to tell you what you can do today to restore your portfolio. I spoke to somebody last night. In fact, I was really upset about this. And they had lost some money. And I gave them some advice, and they executed on it this morning. And so if your portfolio is down 100,000, and you're reallocating a portion of that portfolio to fixed income, there are about 6 different deposit bonus programs in the market. What does that mean? Deposit bonus programs. Those are people who pay you money when you move your money to their account. And these include big firms like Robinhood, the brokerage company, Public, an investment company. They'll pay you anywhere from 1% when you put the money in, 2%, 3%, up to 21%. So what does 21% mean? 21% means that if you happen to have a $2 million portfolio and you're a midlifer and you haven't reallocated yet and you're really upset because that $2 million portfolio is now down 160,000 because you are 100%. You were bullish, you're 100% in the market, and you didn't want to participate in anything balanced or moderate or conservative, and now you're having a change of heart or a change of wallet. So let me just say, if you're having that change of thinking, it's appropriate if you're over 60. It's super appropriate if you're over 70, right? It's not appropriate if you're a millennial. If you're a young person, don't even think about doing this kind of stuff. It's really not important to you in the long term. Let's talk about this particular person, this is an actual case out of our files, and it's a person who came to us a number of years ago, very aggressive investor. It's amazing how very aggressive investors become nervous when the market goes bad. I had a friend who's a pilot, and he used to say to me all the time that there's old pilots and there's bold pilots, but there's no old, bold pirates, right? So if you want to be an old, bold pilot, you may get into a crash. And this right now is got the earmarks of a good market crash. So that client got $2 million, down about 150 grand, okay? We just moved 1 million of that portfolio into a fixed income program. Now, I don't mean that we just bought a treasury or something. We moved into one of the fixed income programs to balance his portfolio, and they added 210,000 to his fixed income account. We moved in $1 million. The day we moved it became 1,210,000. You got the 210,000 tax-free, wiped out the loss in his portfolio, and now he's actually correctly allocated. Now, will the fixed income portfolio participate in any super stratospheric growth of the market 2 or 3 years from now? No, it won't. Those things generally are capped like 5 or 6%, like a bond, like a treasury, like a whatever. It's 100% guaranteed though. It's 100% guaranteed, which reduces the risk score on his portfolio by half. That means even if the market goes down 10% from now, and he loses 100,000 on his equities, he's getting 210,000 on his fixed income, okay? This is the greatest portfolio restoration technique around, and I don't know how long it's gonna last. So let me just tell you, if you have concerns right now today, if you're over 50 years old, these things are not appropriate for young people because you go into them for the long term, like a 10-year bond, right? They're not appropriate. A lot of them have strings attached to them. Some of the strings are good, some of the strings are not so good. You can contact us, by the way, to get information on how to do this. I'll give you a punch list, an actual checklist to check off how to do this and how to accomplish it on your own. It's not really a DIY activity, but you could do it. Also, because you stayed to the end of this a little video about portfolio restoration from the Trump tariff trauma, right? I think that you deserve to get a free admission to our September 25th Economic Forum in Boston. Other people are going to have to pay, but the first 100 people who reserve that are subscribers to the Smart Financial channel get to go for free. It'll be a great dinner at the Marriott Hotel. There'll be speakers. There'll be a lot of lively discussion. We're going to have nearly an hour of audience Q&A. It'll be great. There'll be an expert there on Boston real estate, an expert on buying private equity. It will be some fun. And it will also be some education. And getting smart about your money is super important. And knowing things like this and how to restore a portfolio loss is just the art of being smart. I'm Paul Morrow. I'll see you again next time on Smart Financial.